Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code, and this is the Forex Super Model weekly review for Monday the 18th of October to Friday the 22nd of October 2021. We're going to have a look at the weekly flows now. So euro dollar plus 49. So over that period, over the week, the 18th to 22nd, the euro dollar as an FX pair gained 49 points or pips. Euro yen minus 36, euro pound minus 39, pound dollar minus 1. Pound yen minus 100 and the dollar yen minus 75. If you plug that into the formula, then you get a positive unopposed driver in the yen at plus 211. No backdoor flows. The opposing negative flows mainly coming out the dollar at minus 123, out the pound at minus 62, and the euro was the negative rock at minus 26. Activity plus or minus 211. So over the week then, over that period, basically we had the yen positively driving to the exclusion of all else in the majors, and the bulk of the negative flows were coming out of the dollar and next out of the pound and the euro. As we say, it was the negative rock at minus 26. So we'll stop it there and we'll write up the asset classes. Right, we've written up the asset classes then. So US dollar index, basically you had this big pump up a while ago. It's come back and it's now 0.38 from the high. 38% off the modelled high. So the dollar's relatively soft. Golden theory should like that, and it's actually now managed to come back to half marks. So it's 0.5. Did have a spike as we suggested on the Friday, but it came back after all the noise. Oil did this break and it's at the highs. It's plus 0.7 above 0.47 sorry above the resistance. So it's broken about nearly 50% above the modelled resistance. Wall Street, S&P Tech. Wall Street and S&P are at their highs. The tech is lagging slightly at 0.17 from the high. US 10-year in the bund, this is the price. We've had this pump down in price, rising yields, and it's now come up a bit. US 10-year is off the floor, it's 0.17 from the floor, and the bund is 0.15 from the floor. So they've closed up basically. Basically you've got a softening of yields in the US and the European area in those cases. Copper then, been chopping about, it did a break, it's still above the break, but it's come back a fair bit. It's 0.38 from the high, nearly 40% off the high. And US steel is bumping around the floor, but it's getting there. It's coming, it's 0.25 from the floor, it's 25% above the floor. Right, what's been knocking about, or has knocked it about? Well, Wednesday then next week, I mean the first 2 days of next week are pretty light, to be honest, so that's something to bear in mind. And Wednesday the 27th you've got AUD, CPI, US durable goods and the Bank of Canada rates decision. So we've got a rates decision from Canada on Wednesday, and on Thursday the 28th you've got a Bank of Japan rates decision, and you've got an ECB rates decision. So you've got 3 rates decisions in the pipe midweek onwards next week, so that's something to bear in mind. Right, so we'll stop that there and we'll write up the data cycle, which is our version of the economic calendar. So see you then. Right, we're back. We've written up the data cycle then. So China tier 1 negative, China 2 tier 2 neutral, dollar tier 1 just positive, but tier 2 is very, very positive. Germany tier 1 negative, tier 2 negative. Euro tier 1 mildly positive, tier 2 heavily negative. Yen neutral, pound neutral. CAD tier 1 just about positive, tier 2 very positive. AUD tier 1 positive, tier 2 negative. NZD tier 1 positive, tier 2 pretty negative, and the Swiss is neutral to negative. So what have we got then? Was insignificant. We've got this strong tier 2 on the upper on the dollar. We've got this pretty weak tier 2 sorry, did I say tier 1? It's tier 2 on the dollar. Tier 2 negativity on the euro. We've got CAD tier 2 strength, and we've got NZD tier 2 weakness. So that's where we are. If you look at the flows, then, so the weekly flows. This week, then, we've had the yen positively driving as the unopposed driver. So that to the exclusion of all else in the majors. So and those flows have been coming out the pound. Now, last week, as a matter of reference, we had the opposite. We had the yen negatively driving 894, 900 points off the yen complex last week, very weak, and we had the pound sucking in the opposite, so plus 606. So we basically had a mild reversal of last week. So last week the yen was very weak and the pound was strong. This week the yen is relatively weak, strong, and the pound is relatively weak. So we've had this reversal in the flows. So let's just have a look at what's going on generally. So we've got the dollar, the euro, the yen, and the pound. We've got rates decisions in the yen and the euro next week, and we've got the CAD, the AUD, and the NZD and the Swiss. It's just we've got a rates decision in CAD as well. So we've got 3 rates decisions next week. The Fed's been making noises about inflation. It's been all over the place. The markets, the Fed is basically now saying that they've got the tools to sort out inflation, which may but not be as transitory as they suggest. So they're rowing back on this sort of transitory argument. But nevertheless, if you look at and yields have actually sort of peaked off, really. If you look at the US 10-year, it's the price basically had a couple of breaks down, and now it's starting to look as if it's sort of peaking out. So that's interesting, and we do think the dollar is heading is basically going to head downwards. It's going to hockey stick down. 10-year yields are starting to ease, and the price of the bonds is starting to come up. So if you get a soft dollar, and in the equity market, we're at the highs in terms of the Wall Street and the S&P. The Nasdaq's lagging slightly now, but not as much. So they're all getting there, and it looks like we're going to get, if you get a soft dollar environment, and you've got this you've got this positive CAD data, and you've got negative NZD data there, something to bear in mind. The likelihood, and oil is at or near a high, then the likelihood is you're going to see CAD strength going into, although you've got the rate decision to worry about, but generally the trajectory should be CAD strength. Dollar weakness will help oil, commodities, and all the rest of it. And if you get dollar weakness, you're likely to get an equity strength. You're likely to get a negative in the yen again. So the yen's likely to revert back to being driving in the negative sense, or being a secondary driver in a negative sense. And those flows have got to go somewhere. And if you've got, they're going to go either into the neutral or up on the euro or up on the pound. The pound's starting to get negative Brexit noise again over this Irish border issue. So there's a question mark over that. So you could see a surge in the euro. You could see sort of just a default position. So of where are we? Yen, pound. You could see the main gainer next week being the euro, because it's underperforming, and you've got this situation here, and the yen's likely to do that, and the pound could be neutral to soft. So you've got negative, positive, negative. So you could possibly see a good pump in the euro next week, and that's what we'll be looking out for. The CAD, assuming oil doesn't come off, and we don't think it will, because if the dollar's soft, there'll be no reason not to for the oil traders not to keep pushing on oil. So you're likely to see a positive CAD, but bear in mind you've got a rates decision around the corner on that, and the Swiss is likely to come off as well, just as a de facto transmission via the weak yen. But actually, having said that, if you've got a surging euro, the Swiss could well. That's a question mark there, because the Swiss could well just follow the euro, so and not be so related to risk on, risk off. So that's where we are. It's been a sort of an annoying week. We've only really traded once this week. We traded. We did like a long short trade on the S&P tech. We were net long tech on Thursday, and net short the S&P, and we made I don't know, what do we make? We made 340 points on the net trade. But as I say, it's been very choppy and horrible. But that was just money that we couldn't resist there. So anyway, that's what we did. That's about it really. Thanks for watching. I hope that was useful. See you not tomorrow, Sunday, but Monday for the daily briefing. So goodbye.